Hey everybody, it's Dan Nicholson, your favorite non-conventional accountant, and today is sort of the official first Financial Certainty Friday. I'm just going to hang out for a few minutes and I guess kind of give an opportunity for people to jump on board, and then I'll get rolling. Okay, I see a couple people have joined, so I'm going to just start rolling here. So first off, I just want to kind of talk about the whole genesis or reason behind kicking off this concept of Financial Certainty Friday. And from my experience talking to thousands of business owners at this point, so many of them are going into the weekend, frankly, stressed about the financial situation of their business, and it's causing them to really not be present with their friends and family, and probably lose a bunch of sleep because when the weekend comes, it's hard to close new business and get things done. And look, I've been there anytime things aren't going well with my business, because so much of my identity is really tied up in my career and being an entrepreneur, that when things aren't going quote unquote according to plan, I know I feel a lot of fear and shame, and it causes me not to be present for my wife and for my kids, and I'm distracted and I'm checking my phone, and then that just becomes this additional spiral where I'm thinking about more that I should be doing. So that's really the genesis of trying to go into a weekend, giving business owners some insights into how they can manage their finances better, and hopefully answer any questions that you guys have. So first off, financial certainty. From my experience, that's a term that resonates with folks, but it's really not something that's been defined in any textbooks. And so we decided to come up with our own philosophy and definition behind how a business goes about getting financial certainty. So before I dive into that, let me just tell you why a philosophy is important. And maybe that seems obvious, but from my experience, so many people are going into to the game, and I consider business to really be a sport, without any sort of playbook. And if you think about the great coaches, and I'm a big sports fan, so if you think about John Wooden, who I would argue is the greatest basketball coach of all time, or Bill Belichick, the greatest NFL head coach of all time, they clearly have a philosophy. They're not going into games making up plays on the fly, and as the season evolves and they go into new seasons, they're not changing those philosophies based off new players that have been added to their team. Maybe they make slight adjustments here or there, but they're not simply sort of constantly resetting and adjusting. Now, the truth of the matter is that most small business owners are doing sort of the exact opposite of that. They're looking at their bank account and sort of hoping and praying that the decisions that they're making will result in sort of financial certainty, but really it's just a gamble more than anything, rather than a clear philosophy and framework. So that's why I think having a philosophy around financial certainty is really important. So with that, I want to sort of start to jump into some more specifics around financial certainty. I guess actually I want to pause for a second and address a couple of things that I notice are traps that prevent folks from really jumping on board with a philosophy. The first is this idea of naming the puppy, and I wish that I could take credit for this term, and it's actually was introduced to me by a friend, DJ, if you're watching. And the idea is that if you've ever gone and looked at puppies, and maybe they're, let's just say they're a lab, and you go and you kind of look at a few of them, and you go, I'm going to, and you give a name to one of the puppies. Now, chances are, once you've named that puppy, there's no way you're leaving that puppy at the pound. You're taking that puppy home. So the idea of naming the puppy is this concept that once you've sort of name the puppy on an idea, chances are you're going to fall through with it, whether that's a good idea or not, whether you should actually be taking that puppy home. So let me just give a couple examples of that. I get a lot of questions around, should I hire someone? And usually when they've asked that question, they've already been interviewing people, and they've probably already found someone in particular that they really liked. Now, they've actually named the puppy in that situation. They've already made up in their mind that I need to hire this person. So the question isn't really, should I move forward with it? They're really looking for, in terms of giving a direct yes or no, they're really looking for approval. A similar scenario to sort of illustrate this concept of how we get in traps by naming the puppy would be around purchasing a vehicle. And so a lot of clients call, should I get a vehicle for business? Is that going to be a tax deduction? How's that going to work? And usually when they come with that question, again, they're seeking permission. They've already named the puppy because they've already gone and looked at cars, done some test driving, gotten approved for financing, and they're really asking me, hey, can you give me approval to proceed with this? And so the point of that is to think about what are the scenarios in your life where you've named the puppy and that you're asking people for approval rather than their genuine opinion about the matter. And in those instances, you need to sort of step back and think about prioritization and your goals. And I'm going to come back to that here shortly. The next thing that I want to talk about before I get into sort of the overarching philosophy of financial certainty is the idea of being productive versus being nice. Now, I think all of us would like to be perceived as nice, but the reality is that nice doesn't necessarily mean that people like you, and it doesn't necessarily mean that your business is going to be successful. So I think what's most important is that people respect you, and that you're approaching things from the perspective of let's get this done. And this funny thing happens, and I've heard several people come back to me after they've made that change in their life, and is, you know what, I found that the staff is a lot happier, I'm a lot happier since we've sort of stopped focusing on being nice and being liked and focused on being productive. And so subtle sort of tells, and when you're focused too much on being nice versus being productive, if you're using statements like, would you mind helping me with X, Y, Z, or I'm hoping you might be able to come over here and help me with this. That's really focused on being nice and probably trying to be liked rather than being productive. So with that said, those are just a couple of traps I've noticed business owners really falling into. That said, I want to kind of pivot over to talking about financial certainty and our philosophy and methodology. As sort of foreshadowing, from my perspective, I think you can divide a business really into three categories for simplicity's sake. The money side of the business, so accounting, finance, tax; operations, so the work that you're doing, and sales is usually a component of that; and then human capital, which is the people and maybe your own personal time off. Now, in our philosophy, we believe that you should start first with trying to decide the priority between those three categories. Should you be focused most on money, focused most on operations, or focused most on human capital? Now, I think this is a departure from a methodology that most people put out there, which is that you should start with your goals. You know, what are your goals? What are your values? What's most important to you? What do you want to get out of life? And goal setting is a part of our framework and philosophy, but it's not the starting point. And so let me tell you why. Maybe you've noticed that some days you wake up and you feel really rejuvenated and happy and ready to go about your day, and other days you wake up tired and exhausted, and sometimes you can pinpoint the reasons why you woke up feeling that way, but oftentimes it's just some external factor that's sort of hard to pin down. The reality is we all have sort of this monkey mind, and we need to be able to turn that off for a moment. And some of us meditate or journal or otherwise to kind of reset. Now, if you just jump right into setting your goals, chances are there's going to be some recency bias there, where your goals are sort of going to be the exact opposite of whatever's troubling you in that specific moment. So if you're tired and exhausted, then chances are one of your goals is going to be to work less. If you're looking at your bank account, then chances are one of your top goals is I need to make more money. Now those aren't bad goals, and those may still end up being goals that you put down, but are they the highest relative priority? Are they really going to solve the pains that you're experiencing? And chances are we're really just setting ourselves up for failure because we have decided to focus on an area that's going to solve a short-term problem rather than the bigger issue about why you're sort of experiencing this pain in your life. So I like to use an exercise to sort of figure out what's most important. And really it's asking yourself, and I encourage people to actually go through this exercise out loud and ideally record themselves. And so basically the exercise is to keep asking yourself why. So if you step back and you go, what is the most important thing that I can do to impact my business and impact my life? Now, depending on how you're feeling that day, you might say, I need to work less. I really need to work less. Okay, why do you need to work less? Well, I'm not spending enough time at home. Why is that? Why are you working so much to begin with? Well, I'm just bouncing back and forth between a bunch of fires, and any given day I don't know what to expect. Okay, why is that? Well, people walk in and out of my office at any given time. Okay, why is that? And as you keep going through that, I won't go through the whole exercise, but you end up finding kind of the root cause of what is actually leading to the pain in your life. And it may be simply that you need to set better boundaries. So the initial goal, the initial starting point that you had in this process was I need to work less. And I know we could get more specific about that, this whole idea of SMART goals, but that might not actually be the most important thing. The most important thing might be to have a goal around setting boundaries. And so the idea of working through prioritization first helps to sort of figure out what the goals really should be. And to sort of connect that back to this idea of money, operations, and human capital, when you go through that process, you're going to find out pretty quickly, should I be focusing most on the money side? Should I be focusing most on operations or human capital? You can't do them all at once. They're all important. So over the course of a longer period of time, they should all get a similar amount of attention to your business, but you can't do them all at once. And once you figure that out, then you can start to dig into figuring out what the issues are, and I call those friction points in our financial certainty framework. And friction points are the things that are causing you to not have financial certainty. And we've developed these 4 pillars of financial certainty just to continue with that theme. And so I'll tell you what those 4 pillars are. They're process, goals, reporting, and monitoring. And so say that we determine that the highest relative priority for your business that's causing the greatest strain is the money side of the business. So if that's the case, then the first thing you need to do is step back and look at process. So within the accounting, finance, tax side of the business, what is your process? Is it documented? Does everybody understand their roles and responsibilities? Has it been optimized? Are there schedules in place? So oftentimes what I end up hearing from folks when I start asking all these questions around process is that they don't have a specific date for when they send out invoices. They don't have a specific date when they are paying bills. So they're kind of doing everything every day. And as a result, there's just not enough time to get all that work done, and so things slide, and fire drills end up taking priorities. And so the process just hasn't been documented and optimized, and there's a lot of assumptions about what is being done. And as a result, you could understand the correlation then when we talk about it with those types of specifics about how you might end up not having the cash you'd expect in your bank account because you're not doing things consistently or in the most efficient way possible. The next piece is getting really clear about your financial goals. And a lot of times people will end up with a revenue number. I want to get to 20 million in revenues, and I want to hire 150 employees. So they get really caught up in the sort of the specifics around growth. And growth is great, but you got to get more narrow than that, and ultimately tie those goals back to cash flow. If cash flow isn't there, then it's going to be impossible to hit those upper echelon numbers that you're putting out there anyway. So it's important to get really granular, and going back to sort of the framework I was talking about around around prioritization, it really comes down to the exercise of continually asking the question, why? Why do I want that specific goal? What am I really trying to get at? What's going to give me the greatest satisfaction? So that's the goal setting side. The next piece is the reports, and understanding what goes into those reports. And you can read online a lot of these different buzzwords around KPIs and real-time dashboards. And if you look in your Facebook feed, you're going to see a ton of these different ads advertising these different dashboard tools. And they can be great. They can be extremely powerful. But the reality is that if you don't have the right, if you haven't defined the right metrics, then really you're just spending time on things that aren't decision useful. And so I have a cheesy acronym for you, and I wish I had some sort of like cool emoji thing where it's like cheesy acronym alert, because I will have other cheesy acronyms for you every week most likely. But one principle when it comes to reporting is this thing I call the BIRD principle. And the BIRD principle, the acronym stands for Business Insight That's Relevant and Digestible. And from my experience, business owners have a bunch of different reports, and they're awesome. They've got business insight, and for the most part they're relevant, but rarely are they actually digestible. So they end up getting these reports and they don't do anything with them because they can't make sense of what they actually mean, and they need to set aside 20, 30, 40 minutes and a separate sheet of paper and another Excel spreadsheet to work through the reports that they received to try to actually make sense of what the metrics are telling them. So if you're getting reports and they're not telling you the story of your business right away, then that's a good tell that you don't have the actual reports that you need. The other aspect of reports that I think is pretty pervasive in terms of it could be a financial report, operations, etc., is this concept called the 5 financial statement assertions. And this is pretty in the weeds, so I won't sort of go too deep on this, but so oftentimes when someone gets a report, they just look at it from an accuracy perspective, meaning do the numbers look close to what I think they would be. But the problem is that they need to also make sure that the reports are complete. How do I know that all the data is actually there? Need to make sure that the information is in the right period. So is the data I'm looking at right now, is it actually relevant to this week or this month, or is it including data from some other period that's actually skewing my results? And then is the information presented consistently, or the numbers going in the right buckets, or are some months a transaction getting recorded to advertising, and other months it goes to marketing? And so then when you're looking at your financial statements, you can't really do a great comparison because there's a lack of consistency in presentation. So when you think about reports, they need to meet the BIRD principle, provide business insight that's relevant and digestible so you can make a decision right away. And you also need to think about, are they accurate, complete, have the right presentation, have data that's in the right period, and is it ultimately all relevant to you? The last piece in sort of in the 4 pillars of financial certainty is monitoring. And This is sort of the control side of things. So in some instances, monitoring is actual technology in place that ensures that some unauthorized person can't access your bank account or pay a bill or get cash in their hands. In other instances, it's meetings to actually look at the information and review it. But ultimately, you need some sort of monitoring system in place as it relates to your financials. Same with operations, same with human capital, to make sure that you're detecting things before it's too late. And those meetings and those systems will allow you to identify before it's too late if processes are broken, if your goals need to change, if your reports are messed up. So that's the 4 pillars of financial certainty. Again, it's process, goals, reporting, and monitoring. And our methodology is you figure out the highest priority between 3 aspects of the business: money, operations, human capital. Once you've figured that out, you apply those 4 pillars. That's going to help you identify what's causing all of the financial issues in your business, and then you go about fixing them. So that's sort of an overview of the way we think about things. I guess would open it up if anyone has any specific questions to their business or any financial issues that they have. I'd be happy to take a shot at answering them. And I'm new to this thing, so I'm looking to see if there's any comments. Okay, well, I don't see any questions, so I'm going to end it for this time, but I'll be back here same time next Friday, and have a great weekend. Hopefully this has been helpful to you, and you can employ some of these methodologies to have greater financial certainty in your business and your life. And if any questions come up, feel free to send me a private message or save them for next Friday. Thanks. Take care.